Welcome. I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Greg Carroll, where we're here to provide you insights about the markets, investing, tax planning, and planning in general. So just a market recap from last week. So today is November 21st. As of yesterday's close, November 20th, versus last week, it looks like the Dow Jones were down about 1.5%. The NASDAQ is down about 1.5%. The S&P 500 is down about 1.5%, and the Russell 2000, which is more small caps, is down about 2%. So, but year to date, we're still up. I mean, the S&P 500 year to date, as of yesterday's close, was about 24%. So we're still seeing some good returns, but a little bit of market movement over the last week. On the economic front, it looks like the Federal Reserve is still coming in with inflation expectations at about 2.2%. And as of October of 2024, inflation was coming in at 2.6. So that's still something on the horizon. The other thing I'd like to report is the eye on the Fed. So the future traders built in now a 52% chance that there will be a 25 basis point cut at the next meeting, but anything can happen between now and then. So it'll be interesting to see what happens with the next Fed meeting.
You know, the yield curve has finally gone back to a normal yield curve. So, you know, we've talked about recessions for the last 2 years now, and the inverted yield curve, what that suggests, and so far we haven't had it. I think it would be somewhat ironic if in the next few months a recession takes place. Although I do think we've had kind of a rolling recession. Mm-hmm. You know, and different areas of the economy have receded at different times instead of it all being at one time. So I'm not sure that the indicator was necessarily wrong, but it sure was. I mean, is anyone else surprised that the stock market, its S&P index is up by almost 24%?
Year to date, I'd be happy, like I said, if we can end where we're at between now and the end of the year. We've had a really, really big run up in the markets, and I think a lot of that, we talked in the past, is a lot of the tech stocks that are in the S&P 500.
Right. Yeah, well, back-to-back years, too, about the same, right? 25, 26%.
Right, and the tech stocks, especially the biggest semiconductor stock, is the most important right now stock in the universe. You know, when they report good numbers, the stocks do. The whole market does well. When they report poor numbers, the markets do poorly.
Do they report bad numbers?
No. Do they report bad numbers? Yeah, well, they try not to. That's always hedged.
Yeah.
So.
And then I was looking the existing home sales. So it looks like existing home sales in October rose. So those have gone up. But it's interesting, I'm looking at the 30-year mortgage rates. In September, they were 6%, and now they're hovering at about 6.7% from Freddie Mac. So we are seeing a little shift in interest rates, and it's interesting because over the last few weeks, we've had a lot of, as we're reviewing financial plans, those conversations are still coming up about mortgages and properties and refinancing. We have some clients that had home equity lines of credits where, you know, earlier this year where they were, you know, being charged outrageous numbers. Now those have come down a little bit. But we also have clients, unfortunately, some didn't refinance when they were super, super low. We have a new client that we're working with, and we're going to have a conversation with them today about, you know, what's best for their mortgages and based on rates.
You know, 6.5% and 6.7%
are still low.
Sounds really, really high. But, you know, I think we've said this before. Back when I first bought a house, which was in the 1980s, I was paying over 12% on a mortgage. So if we thought we could get 6%, I mean, we would have been in nirvana.
I think it's hard when, you know, we had 3% or, you know, 2.5%, 3.5%. I think we all want those low rates again. My
guess, and I don't know this for sure, but I'm guessing that this is more average, you know, than anything else. But it just feels high after you were able to get, you know, 2.5%, 3%.
Yeah. Right. It's like in you know, people's investment portfolios, right? They start with $100,000. It's worth $200,000 because the market's done well over time, but then it goes back to $150,000. You know, they feel like they haven't won. They're up 50%, but they're not feeling that way because it was higher. Same thing with rates.
You mean you have clients' accounts that actually go down? I don't understand.
No, it's up, Steve. It's up.
Interesting. So let's talk a little bit about kind of as we're phasing into 2025. I know we've shared this in past WWM talks, but wanted to kind of make sure you're looking at for 2025. There are some salary deferral increases in your 401ks and simple plans. For 401ks, the salary increase is going up $500, so from $23,000 to $23,500 on salary deferral, and the catch-up remains $7,500. Unless if you're age 60, 61, 62, or 63, the catch-up is now going to be $11,250 instead of $7,500. So that's kind of a big jump. So making sure if you're of that age range that you're looking at your salary deferrals and making sure you're taking advantage of those increases.
But you can even, let's talk about taxes for a minute, because when Steve asked me, what are you talking about today? Always taxes. So you still have time to look at your pay stubs, make sure you're maxing out your 401ks for 2024. There's still 41 days left in the year, and therefore it's time to look at pay stubs, see what your withholding is, make sure you've had enough withheld. Look at, have I used all the money in my flexible spending account? Because if you don't use that flexible spending account money by the end of the year, you lose that. It does not roll over unless you have an HSA, which is a different sort of account to pay for medical expenses.
And the taxes we have to pay a lot of times this year if you have a retired client is you got to take out your RMDs.
That's right. Make sure you're taking out your RMDs. Otherwise, there is a 25% penalty on what you should have taken out. It used to be 50%. So make sure you're looking at that. Donations. This is the time of year. It's going to be Thanksgiving next week. Take some time, clean out of the garage. Make sure you keep your slips because you can use those donation slips to reduce your taxes.
You know, speaking of that, this is a time of year where you kind of look to see about tax loss harvesting.
Absolutely.
Now, these last couple of years have been so good. I'm looking at a lot of accounts, and there aren't a lot of losses, which is a good thing.
That is a good thing.
But when people are saying, I want to lower my taxes, you say, well, I'm sorry, we made
so well
too much
for
money.
we did too good.
Right. But now is the time to look at that if you have big gains, right?
Mm-hmm. And if you have gains from a sale of some sort of real estate too, you can look in your portfolio, your stock portfolio, and see, do I have any losses that I can use to offset? Or maybe I sold a business and there are going to be gains from the sale of a business. So gains and losses are netted across the board. So it's not real estate with real estate, and it's long-term and short-term gains and losses get netted at the end of the day.
And then this is also a time where we see some gifting. So sometimes family members like to gift to each other. In 2024, the gift tax exclusion is $18,000, but it's actually going up in 2025 to $19,000. So that's another
something
change.
to keep in mind with that is it's not just 18. So for instance, if you're a married couple, you can gift 18 times 2 and then if you're gifting it to, let's say, your adult children and they are also married, so it's 36.
There's a lot more you can do.
There's so much more than you can
exactly.
actually do without filing any sort of paperwork. And clearly, if you want to gift more than that may be some estate planning to do, some gift and estate planning.
I was talking about this to a client, and they were saying, well, why can't I give more?
You absolutely can.
You want to go through that?
Yes. So there is a lifetime exclusion amount. And so if you gift more than the annual exclusion, which in 2024 is that $18,000 figure, then you have to file a gift tax return. And so that dollar amount that you gift, which is over the annual exclusion amount, then gets subtracted from your lifetime exclusion later. So there's no taxes to be paid if you do gift more. So for instance, you want to help your adult children or a grandchild maybe with the purchase of a house with a down payment, or we want to help with college, then you just file that gift tax and you're not paying any tax right then.
Well, but you can never use that part of your exclusion.
That part of the exclusion, correct, because that gets subtracted out of it. It gets carved out.
Right, as opposed to just going up to the limit that they have right now per child per year or per person.
Yes.
Okay. A couple of podcasts ago, someone was saying, or I felt like I was being really down. Mm-hmm. So I was looking around, and there is a really good podcast, or I guess they write it out too, called the Rational Optimist Society. And they talk about all the great things that are really coming down the pike because of technology. Here's something that they talked about, which I found amazing. There's a company called Terraform Industries, and what they're saying, now this is the Rational Optimist Society, It's one of the most important machines of our time. Imagine turning any patch of land into an oil well, but instead drilling down and you're pulling fuel from the air above. You're looking at me like I'm crazy. What they're doing is it's like a reverse power plant. They are able to take air and sunlight, suck it in somehow, and throw out, I guess they're stripping out the CO2 and throwing out natural gas.
From below.
No, they're just saying, imagine if you would have done that. And this is the same thing in reverse.
Oh, I get you.
Okay, so they're saying out of the thin air that we talk about, they're talking about making natural gas, stripping out the CO2, which means that there won't be any more CO2 that there was before. Okay, and I'm thinking, wow,
That's fascinating.
Imagine and look, energy is something that there's no country that's ever been rich that's ever had poor energy in their economy. You had to be rich in the energy reserves to have a good economy. It's just the way it is. And instead of worrying about all the things that can go wrong, let's use technology, and that's what these guys are saying, for the future. So there's a company, it's not public, so you can't invest in it, but it's called Terraform Industries, and it's something maybe to watch out for. The other thing they talked about, and we know this in Carlsbad, is the desal plants. And they're talking about how other countries like Israel, and I think Japan too, have used desal plants. Like for Israel, it was along the Mediterranean Sea. They were a desert. They had no water other than that. And what was happening is their fresh lakes were being run down. So they went with the desal plants. And I forgot how many he said they had. I'm going to say 8 or so. And it's taking the salt out of the water and making drinking water, etc. Not only do they now have drinking water, but the lakes that were being devastated have now gone higher than they were before. So we have solutions to these problems if we would just look for them. Okay, instead of saying, oh my God, what are we going to do? Another one they talked about, and we've talked a little bit about, are the mini nuclear reactors. They're using spent fuel from the nuclear reactors. And now, where are you going to put all that spent fuel? That's a big issue. I know California is talking about right now. I got something from my local congressman talking about, they're having this fight, I guess, as to what they're going to do with it. Why not use it in these mini reactors? So lots of stuff is coming down the pike. I know we talked about some of the things in medicine, and I am so excited about the future. I kind of wish I was a little bit younger. I wish I was a lot younger, but for many
Don't
reasons.
we all?
For many reasons. But you know what? I'm 72. I hope by the time I'm 82, a lot of these things have taken place. So that is my dose of optimism. And if you can, it's free. It's called the Rational Optimist Society. I would get a hold of it because I'm going to steal stuff from that and use it. But take a look at that.
Another off that theme there is what Elon Musk has done with Starlink and these reusable rockets. I mean, NASA could never, the economics didn't make sense to shoot these huge things up into the space and never get to reuse them again. Well, he's landing those rockets back down, and does anybody know how many Starlink satellites are up in the air right now?
How many?
Over 6,000.
Wow.
Just Starlinks. And now he's launching this new big space thing that's supposed to go out to Mars. And, they're launching that. And if you haven't seen how they catch the bottom part of that rocket that launches, it comes down and it's like in these arms, and it's supposed to come down there and they grab it like out of the air. Apparently, it didn't make it last a couple days ago when they launched one, so they dumped it in the ocean.
But the one before that I saw and it worked.
Yeah, it's amazing. It's like we can get this thing that's 30 feet in diameter and 100 feet tall, the reusable part, and then they catch it. I mean, who would have thought that?
Right.
And yet, private industry is doing that.
Well, I know a lot of people, for whatever reasons, don't like Elon Musk, probably for his political reasons. But I'm telling you, this guy's a genius.
I'm just talking about the technology that he's developed and the way he thinks. And, there's a lot of smart people out there that are creating some really cool stuff.
And he's one of them. They were talking about colonizing Mars. Now, I'm not sure why you'd want to.
Yeah, who wants to go to Mars?
But they're talking about doing that. And my guess is that will happen. He's a brilliant guy, really is. He's come up with a lot of ideas. I mean, look, the Tesla was his idea, and it is now the leading car company in the world as far as how many cars they sell.
Yeah,
which is amazing from nothing. I think that's electric cars. I don't know if it's total cars.
I think it's electric. Yeah.
Electric cars, but it's unbelievable from nothing. I never thought anybody could start a car company and compete.
I remember when they were doing he's going to make, I think 10,000 cars this year, and I'm like, well, that doesn't sound like very many. But now he's doing hundreds of thousands, right? Maybe closer to a million.
I don't know the number, but I know he's to me, taking an idea and making a new car company. It's so expensive to do it. Look at all the car companies that have failed. Even ones in the same industry. Yeah. There's Lucid Motors, which I think is probably a better car, but their company hasn't done as well because they were probably second to market, and they haven't figured out how to lower the cost yet. Maybe, I don't know. I'm not sure of the reasons, but he's made it happen. I mean, so there's lots of great things that are going to happen. I just hope I'm alive to see them. So including the cure for many diseases that we have right now, and that will be the greatest thing.
Absolutely.
So with that, unless someone else has anything else, that's a wrap for this week. We'll see you guys next week. Thanks for listening.
Thanks.
Thank you.
Thanks.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.